Hi, I'm John Stewart, Chief Investment Officer of Farmers Trust Company. This is the Investor's Edge.
The Investor's Edge, Market Insights with John Stewart, is brought to you by Farmers Trust Company.
Hi, I'm John Stewart. Welcome to the Investor's Edge. First up, the week in review. Government shutdown ends. Well, the longest government shutdown in history has finally ended. If you're looking at it from a market perspective, shutdowns usually cause some near-term market volatility, but they always end. That's 100% probability. And that's obviously what happened this time. The market tried to rally a little bit on the news earlier in the week, but volatility returned as the week wore on, and there seems to be some concern about the stability of the AI arms race, which has dominated the markets for the past couple of years. Now, some analysts have talked about a bubble. Others believe this is only the beginning of the most world-changing technology humanity has ever seen. Our feeling on the matter is that the truth lies somewhere in between. Many of the fringe players in AI will likely get wiped out along the way, and the biggest beneficiaries of the technology may be companies that no one is even thinking about right now. So going forward, it's going to be extremely important to do the deep work and find the next big winners rather than just buying every stock that calls itself an AI company. For this week's featured insight, patience is key. We live in an era of instant gratification. TikTok videos and Facebook Reels, tweets, leveraged stock ETFs, and certainly plenty of other examples out there of our trend towards extreme short-term bias. This short-termism has been the trend in the stock market as well. In the 1960s, the average holding period for a stock was 8 years. Today, it's less than 90 days. But the real power of the stock market is in patience. It's very difficult to know when the next big upswing will occur, but a lot of returns are made over just a handful of trading days. In fact, over the past 20 years, if you missed just the top 10 best trading days, your return would have dropped from over 9% per year to just about 5%. So stay invested and let long-term compounding work in your favor. Patience is key. Looking ahead, NVIDIA earnings on deck. Well, earnings season is winding down for the quarter, but there's still at least one more big name to report, the AI chip darling NVIDIA. Now, this stock has certainly done well yet again in 2025, but there has been some near-term weakness in the name as some of the bloom is starting to come off the AI rose. Shares peaked at $212 in late October and are currently trading around $184. Representing a drop of nearly 15%. So will the earnings report reignite the shares along with the broader AI investment theme? Or are investors' recent jitters justified? I guess we'll just have to wait and see. Once again, I'm John Stewart. Thank you for watching The Investor's Edge.
The Investor's Edge, Market Insights with John Stewart, is brought to you by Farmers Trust Company.